G'day folks, welcome to the weekly wrap of natural gas and the ETFs. We're going to be introducing some back testing as well. Before we go any further, make sure you hit that like and subscribe button to support the channel. First, as of today, the 29th of March, the BOIL seeks to achieve twice the daily performance of the Bloomberg Natural Gas Subindex. KOLD aims for twice the inverse of the daily performance of Bloomberg Natural Gas. UNG designed to track the daily change in the spot price of neutral gas through near-month future contracts. In terms of AI data processing and geopolitical events, the expansion of AI data centers is projected to significantly increase electricity demand, with natural gas expected to supply approximately 60% of this growth, leading to a 10% rise in natural gas consumption by the power sector by 2030. In contrast, geopolitical events can cause immediate and unpredictable fluctuations in natural gas demand and prices, such as supply disruptions or policy changes, leading to short-term volatility in the market. While AI-driven demand represents a steady long-term increase, geopolitical factors introduce abrupt and variable impacts on natural gas consumption patterns. In terms of trading parameters, for the 1 hour time frame, we look at the trend on the daily. So invest one contract per trade. So the first entry is one contract. So if we average down, the second entry is 2 contracts. So you've got 3 contracts running. The third entry is 4 contracts. That's 7 contracts running. And the final entry is 8 contracts entered, which you've got a total of 15 contracts. So the limit is 15 contracts, and obviously you've got to make sure when you've got that, your account balance can sustain a drawdown. So take profit is 0.003 for the 1 hour time frame, and the average down is when the price drops by at least 0.005%, or for the stop loss strategy, when it drops by 0.005, you close out your position. First, looking for the natural gas commodity price on the long-term trends on the monthly, the CCI and the price are well above the moving averages, giving us a bullish momentum. Likewise on the weekly, and the weekly you can see there, it's been in a bullish mode now since around September 2024, and a slight pullback towards moving averages, but still bullish on the weekly. On the daily, we have broken to the downside, and that's still just touching that moving average band now on the CCI. So you should be probably closing out your positions if you're going short. I'll go through the back testing in a moment. After we had a bit of a bull run back there since early February, most of February was bullish, and then it finally broke to the downside around about the middle of March. Now on the intraday charts, we look for any micro movements. You can see there on the 1 hour time frame, we had this bullish divergence, higher lows on the CCI versus lower lows on the price. And one thing to notice is when you're going short, again, we're going short predominantly here on the 1 hour time frame. Whenever you see a bullish divergence like this, you should take heed. And the first sign of a bullish movement was, let me just highlight that, was that first trough there on the CCI was pretty similar to the first trough there. So that wasn't really a bullish divergence, although you could argue that was a double bottom. This one here though, you can see there are higher lows on the CCI versus lower lows on the price. That was your first sign that we were going to reverse at some point. Now the price did pull back from there, but not enough to hit into our 23-38% target range. Then we had a second trough here versus a lower low on the price, and that was then from there it broke up. And if we drew a Fibonacci from that low to that high, you can see there it broke very strongly through that and went as high as the 61%. That's where it's currently stopped. So that's bullish movement on the hourly, but again, you don't take long trades on this. So I don't trade this. I use this as an exit point if you're going short, and that would have been your first sign to avoid going short. And I'll show you now on the back test. So here you can see again the daily as a reference going short during this period, and that's indicated by the stop loss of this period here on the back test, the stop loss strategy, and the average down approach. So the stop loss ultimately up until now, today, or end of close, generated 1,495, and the average down approach was in a negative. So you're down to 71,000. Now obviously that's a bit of a hit, and that's why you've got to be very careful with the average down approach. And that's why I'm saying you've got to use these divergence to anticipate any pullback. So again, that would have been your first sign that there was a bullish divergence, meaning the price is going to move to the upside. So you should have theoretically, once you saw this trough down there, you might have done it back here actually, but once you saw that trough, definitely, you should have closed it out your position. And that would have been, let's just mark across there. So that would have been at that point there, once you saw the price or the CCI bounce from that point there, the bullish divergence, that's where you should have closed out your position. Let's call it at that point there for both of them. And on the stop loss approach, that was generating 2,605, and the average down approach was 8,285. So again, be careful with the average down approach. If you let it go, that can happen. So again, always read the divergence and get ready to close out. So always look at so even if you're trading on the daily time frame, which we are, we're entering these trades on the hourly, and you always look for any divergence or any sign of a pullback. In this case, going short, any sign of a rise. So that's where you would have got out ideally. Also looking at the multiple indicator, which we've introduced some time ago. This basically, when the indicator down here breaks above the +2, it gives you a sign to go long and potentially long. And when it breaks below the -2, a sign to potentially go short. Now, I've got here some arrows indicating when it breaks to the downside. I don't trade these in isolation. I trade, and they help use these to support the bearish divergence. So again, with the daily here, this is telling you to potentially, if you're going long during this period, to get ready to sell it, to close it out. But looking at the 1 hour time frame, again, you can see there, we had a small bullish divergence there. It's telling you to go long. That already hit our target range. This one gave you a very early warning to go long as well. So if you're going short during this period, as I said on the hourly, it just gives you an early warning to get out early. So again, that indicator is available in the description below if you want to learn how to trade it. BOIL is still bearish on the monthly, although it's approaching that moving average band. There's no CCI for it. On the weekly, we did have a bullish divergence, a long period, and that started in 2023 versus lower lows on the price, and that actually eventually broke higher. So that divergence was a very long play. On the daily, again, we've got a lot of these sell signals, bearish divergence, and that's where it retraced, and you would have been closing out the position at that point there when CCI broke into that moving average band. So even though the price went higher, always pay attention to the CCI. Now, if we go to the intraday chart, so it's currently bearish, but notice the 1 hour, we had another bullish divergence. So slightly higher lows on the CCI versus slightly lower lows on the price. That's still a bullish divergence, and that broke higher. So again, even though you're trading short here during this period, you can actually use these divergence to get out of the trade. So for KOLD on the monthly, it's broken below the moving averages, giving us a bearish momentum. On the weekly, likewise, although we had a bullish divergence back here, again similar to BOIL, and currently we're in a very strong bearish momentum to the downside. On the daily, however, similar to the natural gas chart, we've got a bullish divergence versus lower lows on the price, and that's starting to retrace back to the upside. Now, I've drawn a target range there, hasn't quite reached it yet, but notice the CCI is pulling back towards a moving average, so we might see further downside. Depends also where you draw these Fibonacci's. I like to take it back to the high before that divergence started, so the very minimum range you would have taken it to was that area there, and it hasn't reached that. You can see the 22-23% range hasn't been hit either at that point, but I think I drew this target range to that high there. Yep. So that's where I've taken to that where that resistance was. So again, these target ranges, these 23-38%, more than 95% of the time they're hit. At the moment, this one's not quite reaching it. So if the price retraces to the downside and so does the CCI, then we're going to invalidate that divergence. So they don't always work. But again, you should always take note if you're going, in this case, if you're trading short, just be aware of this bullish divergence. So for UNG on the monthly, we're still just an early break above the moving averages. The CCI has been bullish now for a couple of months almost. The price is just almost a fresh breakout, although still in that moving average range, so somewhat neutral positioning so far. On the weekly, there was a bullish momentum again, bullish divergence versus lower lows on the price. It broke up. And on the daily, that hit this resistance up here at 24.13, and it's bouncing to the downside again short positioning, and we've got a bit of a retrace to the upside towards that moving average on the CCI and the price. Hasn't quite hit the moving average yet, so still a bit of upside to go. If we go to the intraday chart, the 1 hour chart, again using the 1 hour, the daily as a reference, we go short only, and you would have closed out your positions if you're trading that on the 1 hour time frame. At the moment, it's again a slight bullish momentum on the hourly, so just be careful. Don't go long until we see this break more convincingly above the moving averages on the daily. So here are the back testing or trading parameters. So if you're trading on the 1 hour time frame, you invest per trade 1 contract, the first contract entered, and you average down limit of 15 contracts. So basically the contract entries, the first one is 1 contract, next lot is 3, you've got a total of 3 contracts now running. Add another 4, you've got a contract, 7 contracts running, add another 8, and then you've got a final of 15 contracts maxed. And every time you average down, you make sure it drops by at least 0.005% for a 1 hour trade or contract parameter. If you're trading on the daily, the average down is 5% decline. Now, trading shares is very similar. Invest per trade $1,000 per trade. So you invest first $1,000, next lot is $3,000, next is $7,000, and finally you got the max of $15,000. And again, average down by 5% if you're trading on the daily time frame, and take profit of 3%. If you want to follow the traditional stop loss strategy for trading CFDs on the 1 hour time frame, you invest 1 contract per trade, take profit of 0.003% or 3% for a daily trade if you're trading on the daily time frame, and a stop loss is when the CCI 150 turns into the moving averages. Likewise, if you're trading shares, if you're trading on the daily time frame, invest per trade $1,000, take profit is 3%, and again stop loss when the CCI 150 turns into the moving averages. Obviously, you can invest more than $1,000 in any of these trades, but just you've got to be very careful of the your money management and your account balance. And I've limited it to 3% take profit on the daily and 0.003, the equivalent for the 1 hour time frame, because I found if you make it too high, in other words, if you aim for a 5 or a 10% gain, often you're a lot longer in the trade than you really expected, and it just gives you a lot more turnover when you're the smaller take profit return.
To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching, and see you in next week's video.